Hey guys, Toby Mathis here, and I'm putting a bill on your radar that eliminates taxation of Social Security benefits. We're going to dive into it right now. Number one, this is a bill called the You Earned It, You Keep It Act. It's been proposed by Angie Craig, Representative Angie Craig in the House. Hasn't passed, but you're going to want to watch this because it is about making Social Security benefits non taxable and more importantly, raising the amount of Social Security taxes you pay. And for a lot of us, it's going to have an impact. Whether you're a business owner, whether you're an employee, whether you're a sole proprietor or a partner in a partnership, this could have some pretty major impacts on you. And here is why. Number one, the bill itself, you get to see it right here. It says You Earned It, You Keep It Act. They're saying it's a good idea. They're saying, hey, our seniors are having to pay tax on Social Security benefits if they make over $25,000 if they're single, $32,000 if they're married. Those numbers are not adjusted for inflation. So they were actually passed in 1983. And so that's why you see this, a lot of people talking about it, saying, hey, this isn't right. How come I'm having to pay so much tax on Social Security benefits? You know, it's like they got taken out of my paycheck in the first place. It was a tax that I had to pay. It's not like I got a deduction for it, right? How come I'm having to pay tax again when I receive it? And it's, realistically, it's because they didn't adjust those numbers. So back in 1983, the median house price was under $100,000, and if you had a $32,000 amount that you were receiving during retirement, then that would push Social Security into taxation. Well, that never got indexed, so now we go to present day where we're over $400,000 for that median home, and it's still 32,000. Really, it should be over 100, right? You'd be looking at it saying, hey, just ratio wise, it would make sense that maybe it's a third, right? Then it would be well over $100,000 that would be non-taxable for a married couple. Why are you guys? Why can't we get together and get that done? Well, part of it's because Social Security, the way it's being run, is going to be insolvent, so they have to raise money. So what you do is you look into this, you see that it's repealing inclusion of gross income of Social Security benefits. So there's no taxation of Social Security benefits. Period. Boom, gone. But then they go down here and they say, hey, but we're gonna have to mess with Social Security tax. So Social Security tax is really 6.2% paid by you, 6.2% paid by your employer. If you're self-employed, you're paying both sides. You're paying 12.4%. We're not talking about Medicare here. We're just talking about the old age disability and survivors insurance. So it is 12.4%, and there's a phase out. So normally, if let's say you're making $200,000 a year, you're going to phase out of that portion of the tax, the Social Security portion, at about $168,000. Boom, you're done. 168K, I'm done. I don't have to worry about paying Social Security tax anymore. And what they're doing is they're increasing that, not that threshold, but what they're doing is they're saying instead of being, I never have to worry about the tax again, what they're saying is you get to worry about it again if you go over 250,000. So from 168 to 250, there's no Social Security taxes. You go over 250, it's back, and it's 12.4%. If you're an employee, you're paying 6.2%, but your employer is paying the other 6.2%, which means there's less money for paying employees and other things in the business. You're self-employed, obviously, this is coming out of your pocket. This is going to be a painful tax for people. Let's say you're making $500,000 or something like that. You're talking about 14% of 250,000 extra, right? So it's not a small amount. I don't even know what that is. Let me get my little calculator out. So if we're making $250,000 and we get that 14%, there's a slight deduction, but it's going to be over 35,000. Maybe there's a portion of that, half of it gets deductible. So the math will probably be closer to 32 or something like that, 33,000. Boom, that's a pretty good size hit. That's your profit margin for a lot of you guys, right? So you're looking at it going, hey, this is really what this is really what my gravy, you're taking it away from me, right? So it's going to have an impact. There are ways to work around. Now, this is the interesting thing is whenever you see these types of taxes and whenever you see these types of bills come along, understand that it's folks like me that find all the workarounds and work with our clients, but not everybody has somebody like me to work with them to eliminate that tax. So first off, if you're sole proprietor, the easy thing we do to eliminate employment taxes and excess employment taxes is immediately take you over to an S election, and it eliminates on the profit that you pay after taking a reasonable salary, any employment taxes. So it's not just Social Security, but it's also Medicare. 70% of the businesses out there, however, are sole proprietors, and they're going to get hit by this. And then all of the W-2 wage earners who make over 250,000, they're going to get hit with this. And you guys might say, cry me a river, they're rich. Just understand that that's money that comes out of the economy, and it affects all of us, whether it's, investment, less money for spending, all those things has an impact on us as an economy going to the government. Now they're going to say that it's going to keep Social Security solvent until I think it's 2054. Like it's going to buy us some time so we could see if we could figure this thing out. But the idea of the bill, just real simple, is let's not tax Social Security benefits, but to pay for it, we got to raise more money to rescue Social Security. How are we going to do it? We're going to hit the middle class again, because again, the rich are not going to end up paying this tax. The rich are going to find ways around paying the tax. It's going to hit that middle class again. So I'm interested in your thoughts down in the comments. Let me know what you think about the current system and whether you think this will help. And if you're looking for it, again, you could just go type in the You Earned It, You Keep It Act. You could probably find a copy of this bill sitting there, and you can read it for yourself. But I'm going to be watching it. We'll see whether it gets through gets through Congress or not. But it certainly is worth a discussion and something that you should be thinking about, especially if you are self-employed and you make a decent amount of money. They may be coming after some of it.